Hi there guys, hope you're all well and welcome back to another video. So in this video we're going to go over market structure and what it is, how to understand it, as we always do with any other topic. So you'll have noticed now the past few videos have been more around confluences and how to build them. There is going to be a video coming out shortly in terms of confluence, going over them, why they're important, and maybe just how you can put a strategy together surrounding the videos that we've gone through. There will be an example in this video of market structure based around the psychological levels. So remember, there was a video, I forgot how long it was ago, probably a month ago, how to find and trade psychological levels. If you'd have watched that video, you'd have potentially found this trade using market structure. So it's very important, guys, but what we'll do, we'll go through what is market structure and then we'll go over some examples. So market structure. So in my opinion, using market structure is a very easy and simple way to potentially find trades when you're in the market. For me personally, obviously, most people do trade differently. For me, market structure has always been number one, in my opinion. It's always what I've used to try find trades. I will use market structure and then use my confluences to try find an area where, for example, a couple of indicators or things like fibs, EMAs, break and retest around the structure. Anything like that where I can find an area where there's a few things telling me to buy or sell, I will look for trades like that. So you tend to find that what has ever happened in the market in the past will happen again in the future. And that's just how the market works. History does like to repeat itself. And this is why market structure is so important and why we trade it. So in terms of market structure, you are looking at higher highs, higher lows, lower highs and lower lows. Obviously there's patterns in between, but they are what the patterns consist of. So it could be a trend direction change, it could be a trend continuation. Whatever it is, we are going to go over it in this video. So they're just the four simple structure points that can easily be used to find these setups. And once you start knowing how to identify the higher highs, higher lows, and how to follow them in the market, then you will potentially know when to buy and when to sell. So if we're looking at higher highs and higher lows, this is usually what we will see in an uptrend. However, we can also spot them at the start of a reversal, which we will go into. So the clue is in the name of this one, guys. The highs in the market are getting higher and the lows in the market are also getting higher. So price can't just go up in a straight line continuously. It has to do things that we call pullbacks or retracements. What you tend to find is that the market will push up like so. And then as people are taking profits, so people are getting out of their buy positions, price will then start to pull back. Then once price has pulled back, the buyers will step in again at a better price. So remember, in the market, you are wanting to sell high and buy low. You don't want to be buying at higher highs because that's the highest point in the market. Yes, at the point a higher high is forming, you don't potentially know that is going to be a higher high, but you want to be buying, in my opinion, where the pullbacks happen in an uptrend. So you can see here, buyers taking their profits, prices pulling back. The buyers then step back in at a better price, push the market up again. And you can see from this point here now, this high was made, pull back. This higher low, or the low here, was higher than the previous low, showing that price is then stepping up. The next high here is higher than this one, admittedly in level with the previous. Then the low is higher again, pushed up, made a brand new high or a higher high, and then again pulled back when people were taking profit, looked to retest this level with this wick, and then this created the higher low before price to continue. So we have had a video in the past, I think it would call it the easiest Forex strategy you will ever see. That's in a previous video, and to be honest with you guys, it is, and this is kind of what is built around just the market structure. So with this, guys, that is just an example of price in an uptrend and with the higher highs and higher lows. So exactly the same, lower highs and lower lows will usually happen in a downtrend. And I say usually, they do happen in a downtrend. And this is what we can do when we are trading them. So you can see here, guys, I've put this green zone here. So as mentioned before, If people are selling, you want to be selling at the highest price possible, because then if price was to continue down, you are going to make more pips, more percentage, and things like that. So you can see a high was made here. Then price pushed down and made a lower low. Then what happens? People take profits. There's not as many sellers in the market. Price then pulls back, retested this previous low, which is what we really like to see in the market structure. Break and retest, in my opinion, are the easiest things to trade in the market, and we will go over that in a future video. But you can see then, made this lower high, pulled back down, broke this low here, created a lower low. Then what do we expect to happen? Sellers are taking profits. There's not as many sellers in the market. Price then pulled back, created almost like a double top. And double tops don't necessarily happen at the end of an uptrend. They also happen when the price is trending down. Price can return to a level a few times before it continues to keep going. Then you can see, created a new low and pulled back. And this green zone is just saying we are going to assume that because the market is trending down, that this price will make a lower high in and around this level. It may well be you have confluence, whether it's Fibonacci's, your Bollinger Band, your RSI, whatever you use. If you've got evidence that a lower high was potentially going to be made here, there is nothing wrong with getting into this trade if you are assuming that the trend is going to continue down. If price is going to continue down, it should not break this high here, which is what we're going to go over in terms of knowing when the trend changes and things like that. So how to trade the higher highs and the higher lows. So in this example here, we're assuming the price is trending up. Price has made a brand new higher high and then pulled back to make a higher low. So you know that in the market, buyers are taking control. The highs are getting higher and the lows are getting higher. So great. But how do you know what levels in the market to trade when this happens? And this is what we're about to go over here. So we will go on to some chart examples in a couple of minutes. But for now, we're just going to go over the easiest drawings, which will hopefully will make a bit more sense to you. So once price breaks a previous high in an uptrend, remember, you are looking to buy at the lowest price possible. If you are selling, you're trying to sell at the highest price possible. And how do we do that? We do that, in my opinion, by trading the higher highs, the highs and the lows, and trying to picture where they will be in whatever trend you are trading. So if price breaks a higher high, there are two zones that I am looking to build confluence around. And remember, guys, we've had so many videos in the past with confluences you can use. So if you are struggling for confluences, just go back into previous videos and see if you can build any confluence around these zones. So the first zone which price could come back to, and I like to see these as brick walls. So when I'm trading with my confluences, let's say, for example, I have, this structure point here. So I have my higher high and price is going to break this higher high, and I'm saying potentially price should break and retest this high, and the lower and the higher low should be around this level here. For me, I would want to see an extra two confluences, whether it be a trend line, a round number, anything like that, fib, EMA. I would want to see that in and around this level for me to take this trade. Okay, so that is the first line of defense. This high is the first brick wall. If I then have, let's say, a psychological number, that would be my second brick wall. If I then have a trend line coming up here, and I'm assuming price will respect the previous trend line, that's 3 brick walls for price to get past. And that's just the easiest way that I remember it, guys. It might sound stupid to some of you, but I just picture that there's a brick wall at this level, and the more confluences I have, the harder it is for price to get through it. And that is really what it is. So that's the first level, the break and retest of the higher high. You are still obviously buy bias, even if price breaks this higher height and pulls back further. Your next level that I would personally be looking for trades on is on the higher low. So if price has pushed up, made this higher high, pulled back and made this higher low, and then it's broken the higher high for a trend continuation, you can still buy on this higher low. These are the only two levels that I would trade when I am looking for buys in an uptrend personally. There's a million and one different strategies out there, guys. This is just from my experience and from what I do. Yes, you can buy in between these levels and it does work. I'm not saying it doesn't work. I'm just saying from my experience and what I do, this is what I would say to do to make it easy. It's easier if you can see a trending market to draw two zones and say, well, I'm buying or selling when it hits these two zones. It takes out a lot of stress and you know what you're looking for before it's even happened. That is the best way I personally find trades. I'm trying to guess what is going to happen and play it out before it happens. Then when it does, it makes me more confident to take the trade. So, if you can see here, first level, higher high, break and retest. Perfect. The next level is just the higher low. As long as price respects this higher low, and you maybe get wick rejections, maybe you've got, like I say, your trend line, everything like that, you can still buy in and around these levels. So that's just what I wanted to go over in terms of this diagram here. Buy in an uptrend, whether it's retesting the higher high or the higher low. The minute price breaks this higher low, and this is the important part, so let's say price comes down here, breaks your higher low, your bias then changes, and we will go over that in a couple of slides, just in relation to when you switch your bias. The same goes for when you're trading lower highs and lower lows. So let's assume the market is trending down, a new low is made, people are taking profits, there's not as many sellers in the market, price retraces back up, creates this lower high, and then more sellers get into the market for a better price. Because remember, you are buying low and selling high. It's the same with everything. Price then breaks past this low, the sellers are obviously taking control, and then what are you trying to do? You're going to try to build confluence around these two areas. The lower low, which is the first line of defense, so whether, as mentioned, the trend line, EMA, fib, Bollinger Bands, whatever your confluences are, and it works, do them. So that's your first level. If price then comes back up to retest this lower high here, you are still sell bias and you can still get into this trade. But there's nothing wrong with price double topping halfway into a downtrend. People assume that a double top only happens at the end of an uptrend or at the bottom of a downtrend, but it doesn't. It happens mid-structure as well. So price can easily come back up to this lower high, retest it. As long as this lower high is respected, then that is when you can take sell still. The minute price breaks this lower high, I would then personally change my bias to buys. Okay, so with that, we will now go over how to switch your bias and when. So, when do you switch your bias? For me, and just in terms of how the market works and the rules and structure, this is the easiest way to do it. So let's assume on the left-hand side of your screen, price is trending down, okay? Lower highs are being made, lower lows are being made. It's easy to trade, everything's looking good. Remember what I said about once price breaks this low, your two levels of places you want to be building confluence is around the lower low and the lower high. In this situation here, price smashed past the lower low, so there was no trade there, and then also smashed past the lower high. Now, in your head, you're saying, well, price should have respected this lower high here and potentially double topped, but it didn't. So because of that, once price breaks the previous lower high in a downtrend, that is when I would start changing my bias. Now, there's nothing wrong with waiting for price to come back to this level and keep going just so you have confirmation. But for me, if I'm being super aggressive, if I can see that price has been trending down for a while and this happens, this could potentially be the first buy in a reversal trade. And everybody wants to catch these reversal trades, get in at the start of a trend, hold till the end. That's not what I'm interested in. I'm interested in getting my 3% from the trade, which is what I usually aim for, and getting out. I'm not bothered about holding it for 30%. So once price breaks the previous lower high, and we will go into some chart examples, in a downtrend, that is when you will change your bias. Because then, instead of price coming to where my mouse was and creating a lower high, price has then created a higher high, because this high now is higher than this one here. And that's when you would change your bias. The same again in an uptrend. If price is trending up, everything's looking good. It's creating higher highs, higher lows. It's then created another higher high, right? When are you going to switch your bias? Well, if price then pulls back down, breaks your higher low, because what you're wanting to do is for price to create a higher low here and then a higher high, okay? But then what's happened is that because price has broken past this higher low, you are now, in my personal opinion, sell bias if you are wanting to catch that first trade. So you can see then what I would expect to happen, and it doesn't happen all the time, nobody's right 100% of the time. I would expect price to pull back into this lower high level and then retest this level here and pull down, almost like a head and shoulders type formation. And that is what I would say. So it's the same rule in terms of when you switch your bias, but there's just different terminology regarding when your highs and lows are broken. And that's as easy as that. So this is a clear example of the end of a downtrend. So we can see, guys, if we're looking at this chart example, I will go into another one after this in terms of when an uptrend ended. And you can see, right, let's just go through from left to right what's happened. So one, a new lower low is made, right? Obviously, the market doesn't move as easy as these examples here. If the market moved as amazing as this, then we would all be billionaires because it's that easy. So what happened? Price then broke through this level here because you can see the price is clearly trending down. This here was a low within the market. Oh, no, sorry, a lower high within the market. Price then created this lower low. Everything was looking great. What did I mention about the two levels you want to be trading? For me, if this high made this low here, that means that I am sell bias until this is broken, okay? The minute this is broken, that's when I'm changing my bias at this point. Break, retest, wick rejection. In my opinion, a break and retest with wick rejection is enough to get in the trade. You can see price then broke through and created a new low within the market. So if we're looking at new lows within the market, we are expecting that price would now make a lower high, right? So this low has been made, meaning now, because this high here made the low, I am sell bias until price breaks this here. And the easiest way to go, in my opinion, if your price is going in a downtrend, you are looking, right, which high made this low? So you can see this low here is lower than this one. What high made it? Right, this one here. So I need price to stay below that at this point. Right, a new low's been made. What high made this low? Well, this high up here made the low. Great. So that means I am now buy bias the minute price breaks this high here. And you can see the minute price broke this high right here, this is when I would change my bias, because the minute the previous lower high is made in the broken within the market is the minute I will change my bias, in my opinion. You can see then price did fly and it didn't actually come back for the retest, but it just shows you the examples of what it is. So what I'm going to do now, guys, I'm going to go onto the charts and I'm going to get up the example I mentioned regarding the reversal at the psychological number using what is shown in this video, okay? So what we'll do, we'll go onto the charts and we will get looking at that. So guys, just come onto the charts now. What I'm going to show you is an example using confluences we've used in previous videos, and then showing what the market structure was like following this video and how you can kind of put everything together. So the first thing is we saw that Australian dollar US dollar last week was approaching the 0.8 level. So when I'm trading round numbers, for example, with GU, it might be like your 132, 133, 134, things like that. However, with like Australian dollar, US dollar, you're looking at like 0.8, 0.7, 0.6. So you kind of get the gist of that. So price was coming up to a big level within the market. 0.8, it had not been there for a while, and I thought, you know what, there's potentially going to be some profit taking at this level. So remember what I said regarding price moves And then if buyers are taking their profits, then price will start to drop and then you can get back in. I thought, right, price is getting back up to 0.8. This was all documented step by step on my Instagram story. What I said was going to happen happened before it even did. So again, guys, if you're not following us on Instagram, it was on the Dark Horse FX Instagram. We do usually do some market breakdowns and stuff like that if there's anything going on within the market. So that is something to look at. So as mentioned, price is coming up to 0.8, right? It's up to you in terms of what you would do to enter this trade regarding confluences and stuff like that. Me personally, I would always use market structure. Okay, so let's just see what happens. Price starts messing about at 0.8. So automatically, guys, you can see that almost like I mentioned, it's not going to be as easy and as clear as the examples I drew. So you can see around this area here, I made this high. So until this is broken, I am still buy bias, okay? Price then came up. Came back for another touch. So on the higher time frames, this is only on the 5. It happens on all time frames, this structure. But you can almost see it's coming to be like almost like a triple top. So it's not a double top, it's a triple because there's 3 of them. So if you're now in this example here, what am I looking at? Well, I'm looking at, right, which low made this high? So a new high was made within the market. We know that. Where was this made from? Well, actually, it was here. This is where the higher low was, wasn't it? Because this made that. Therefore, as long as price stays above this level, I am still buy bias. But because I am using the fact that price has approached the 0.8 psychological number and I want to sell, I am marking my zones to be like, when do I want to sell? I want to sell once price breaks this level here, as mentioned in the previous examples. So, once price breaks through it, ideally, what I want to see is price return to this level and retest it. Okay? So what we can do, we'll play it out. You can see price then started returning to the level. And then you can see it fell away. So that is a very simple way that you guys can go off one confluence and then use different time frames to notice what it is. You can see this made this high, price then broke through here, came back, it retested a couple of times in and around the area. You've got to know you need to include your wicks and stuff like that. So it did retest the area with wicks and then did fall away. So it depends where your entry could have been. You could have wanted to get in the minute it retested if you maybe had like your EMA. This is a good confluence. If you wanted to get in after these wick rejections here, stop above the level, target down. It's completely up to you in which way you would enter this trade. But all I wanted to show you guys is that this higher low made this higher high, meaning as long as price stays above this higher low, I'm still buy bias. But because I'm looking for sells following the 0.8 psychological number, I'm hoping to get a retest of that higher low, for the higher low to then be retested with a lower high, and then you can sell back down the market. And you can see, guys, actually, if we go to the 4-hour time frame, following what happened, and let me just get out of replay mode, sorry. So what I'll do, come out of replay mode, look what happened following that. So just following the psychological number that we spoke about in the previous videos, price went from 0.8 and is still dropping, but dropped 300 pips. And there has been a bit of a retracement now with profit taking. But overall, guys, 310 pips just from trading a psychological level with market structure. Easy as that. And what I'll do, even while we're on the charts now, we'll have a quick look and see if there's any examples. So, in this example here, we can see, right, what has been made? Well, in this example here, a higher high has been made. Well, if this higher high was made, where was this made from? This right here is your level. Sorry, let me just go back. So for me, if I'm trading this structure, my two zones of interest are here and here. As long as price stays above this level here, I am buy bias. The minute price breaks through this low, that is when I am going to change my bias. But because this higher high was made here, I'm looking for some form of retest. Ideally, if I'm trading this structure, I'm looking to trade a retest of this level, or even a deep pullback down to this level. And it's as simple as that, guys. So I hope this example here has helped you, just using the market structure and the psychological levels to get into a trade. So what we'll do now, guys, we'll go back to the PowerPoint and do a little recap for you. So guys, what we'll do now, we'll recap over everything I've just been through very quickly, just to make sure that you guys understand it. So let's go back to the start. So, market structure, what does it consist of? Higher highs, higher lows, lower highs, and lower lows. It's a mouthful, that. So, they're the 4 things that you can use just to identify what way the market's moving, certain levels you should be trading, and it's pretty much as easy as that. As mentioned, history repeats itself within the market, so it's one of them where once it's happened once, there's a good chance it's going to happen again. Higher highs, higher lows, this is usually what we see in an uptrend. However, as we saw then in terms of that 0.8 sell, you can do it at the end of an uptrend. If you see these structure points are broken, you know when to change your bias. So the higher highs and higher lows are just as seen on the screen. It's pretty simple stuff, guys. And all it is, if price is trending up, the new highs are being made. Price then pulls back through people taking profits and things like that. And then that is what we call a pullback. And then you're trying to buy in at a better price. Lower highs and lower lows. Same what we see in a downtrend, self-explanatory. As we saw here, where my green zone was, this is where you want to look at entering the market if you are trying to sell, because you are trying to sell at the highest price possible. The 2 areas you want to be trading when you're trading higher highs and higher lows are as seen on the screen. Break and retest of the previous high is great, or if price goes through that level, you can still look for buys on the retest of the higher low. You are still buy biased as long as price respects that higher low. The minute that breaks, you potentially could change your bias if you are being aggressive. How to trade the lower highs and lower lows? Exact same, guys. Once price is trending down, you can see price is making the lower lows, pulling back and making lower highs. If you look at this example here, you are looking to find the retest of the lower low, or the retest once price pulls back to the lower high. Whatever confluences you are using, the trend lines, EMAs, Bollinger Bands, RSI, all these types of things, guys, if you can build up a picture of where your, in this example, lower high should be, whether it be on one of these 2 levels, you hopefully should be able to find a trade. When do you switch your bias? So you can see lower low, lower high, price created a lower low. You might be assuming price is going to make a lower high, but then price slams through and then creates a higher high, meaning this high right here is higher than the previous one when you were sell bias. Now that has happened, you are potentially going to change your bias, look for buys, and you could potentially get in at the start of a really nice trend. In terms of when you're going to sell off the back end of an uptrend, higher highs, higher lows, create a higher high. You're looking for one of the 2 areas to be retested. In this example here, it didn't, and you can see that price then pulled back. And once you see price break this higher low, you are then looking for that higher low, in my opinion, to then be the area where the new lower high is at the start of a downtrend. I hope that made sense. And it's really as simple as that, guys. Going over this example here, which we already have, you can see break, retest, wicks on the previous low. Great, that's where we want to get in. Price then created a new low, so you are looking for a lower high. In this example here, it tried to make a lower high, didn't quite manage it, and then once price broke this level here, because remember, once price breaks the lower high, you are then changing your bias because it shows that price is going to make a higher high when you are selling. So that is what I would say, guys. I hope this video has kind of helped you guys. I'm unsure how long it is, but I think there's quite a lot of information in here that's valuable. There is more videos coming. We are back to consistently uploading. Sorry, it's been a while. I know we uploaded a video last week, and we're probably going to aim for 2 to 3 videos a week now. weekly breakdowns at the end of the week of the kind of week we've had, maybe some FTMO series, but mainly the education, guys, because it's okay us showing you our trades and things like that, but if we're not teaching you anything, what's the point? We are here to give away as much free information as possible. Obviously, we still do have our course and community, which is kept kind of not in the shadows, but the strategy we teach there obviously won't be released onto YouTube because that would be unfair. But the strategy that we day trade with, and that obviously all our members use, that is what is in the community. So hope this video has helped, guys. If you are looking to learn some more about Forex, subscribe for future videos. We are nearly at 2,000 subscribers now. So hopefully after maybe a week or so of this video being uploaded, we will be at 2,000 subscribers. Link in the bio for a couple of other videos that may help you. And also, if you want to join our community and the course, it's only £150 and you get lifetime access to the community, weekly Zoom calls with myself and Tom, and 24/7 support. So yeah, guys, hope this video has helped and we will see you in the next one.